Good Wednesday morning from Yahoo Finance's New York City headquarters studios. I'm Yahoo Finance Executive Editor Brian Sozzi, and we're looking at the bells there on Wall Street. I am in search of good news today, friends. As I posted on LinkedIn way too early this morning, finding good news in the market this week has been harder to come by than an NVIDIA GPU. Drumroll, please. The post-earnings Palantir sell-off looks poised to continue. A fresh flight to safety in markets is lighting a fire under gold again. Bitcoin prices dip below 100,000 overnight as the crypto pullback rages on. Again, just looking for happy things here, not really coming up with them. Here specifically is what I'm watching here today. Total of $500 billion value was wiped off the Philadelphia Semiconductor Index, aka the SOX, on Tuesday, as investors suddenly fret about growth rates. Last week, they didn't care. Today they do, with strong results last night from AMD being pretty much totally ignored. Palantir's stock sell-off is continuing. Even Pinterest is getting smoked because of an outlook the market has rendered too darn soft. If there's any positive news, it's coming from B of A. In this case, that would be Bank of America. The company is holding a long overdue investor day in Boston today. Ahead of that, in a 302-page slide deck, really long read, haven't got through it all. Bank of America outlined medium-term EPS growth targets of 12%. Bank of America CEO Brian Moynihan tells me he hasn't seen any noticeable shift in consumer spending because of the government shutdown. Always good there. He also tells me he won't be leaving as CEO anytime soon after more than a decade at the helm of this big, giant bank. Here in the opening bid roundtable, Ben Emmons, FedWatch Advisors Chief Investment Officer and Founder, alongside Yahoo Finance Senior Reporters Brooke De Palma and Inez Frey. Ben, coming to you, I teased a couple minutes ago, I was really leaning into the doom and gloom I'm seeing in markets this week. How concerned are you that reports, good earnings reports, Palantir, AMD, these reports are being sold?
It's somewhat concerning, Brian, because, that should actually confirm the price of the stock. But I think what people have gotten to is saying, these prices have extended far beyond for where the earnings are projected out in the future. And I think this becomes now in most investors' minds that I don't want to keep paying up high prices here for earnings that, although they are very good and solid, who knows what it's going to play out next year. There seems to be also maybe some uncertainty about the economy, where we're heading next year. So I think this is why we're seeing the sudden pullback. But then again, Brian, we're going into year end. It tends to sometimes get a little bit this way, a little twitchy. November is also a month that's a very strong month, seasonally strong, but the starts are typically poor. So it's sort of confirming the history that we've been through in November. So I wouldn't hold my breath yet to say this is going to be a bad month, but it is to be noted that people are paying attention to overvaluation and that becomes part of the narrative.
I like that, Ben. I think that's a perfect way to put it. The market is twitchy. Stick in the headline, guys. That's what we're rolling with. Ben, let me stay with you here, though. We have learned, it's been actually consistently proven over the past few years, dips are to be bought. Every single time there's been a series of bad news, the market has sold off and then it's come back. In the news, I would even argue, Ben, Palantir, that wasn't bad news. AMD's quarter was great. Should investors just continue to use that playbook, though, on buy on the dips?
I think so. In the sense that as you say, is a kind of conditioned way of looking at the market, as you showed it in the graph. So people pay attention to that too, and say, okay, this dip is coming, it feels pretty good. Therefore, I can step in here. I feel like I have some cash on the sidelines. So all that psychology is all there to rally even further from here. But let's keep paying attention to this price, right? Let's keep paying attention to the twitchiness of the market, because it's not there for nothing. Overnight, for example, is a really sharp decline in the Nikkei and in the Kospi, the Korean index. There's other examples out there that this is not just here in the US, but places elsewhere. So I do think that buying dips is an opportunity here, but you may want to take a step back here and wait for this a bit wash out before you do it, because of, we don't know when the government's going to reopen as one example, which we need some more visibility on the economy too. We got good ADP data today. That's encouraging, but we don't have enough visibility. And globally, it seems to be playing out the same way. So I'll be a little careful here.
Inez, what's your take on this twitchy market?
Look, I mean, so much has been priced into the market already. These valuations, investors are questioning these high valuations, and they're looking at these stocks that have doubled in price, that have done very well this year, like Palantir, for example. That AMD was down in pre-market, but it's not that down that much. I mean, it's little changed right now, and AMD has gone up 107% year to date. With not a lot of visibility with respect to what the Fed has on hand, what it will do in December, with the government still shut down. The question is, are we going to go into the end of the year with a Santa Claus rally? And Wall Street is looking at seasonality. It's looking at the fact that it ended October on a good note, and 80% of the chance when that happens, when you end in green territory, you will see gains for the markets in November and December. UBS saying that they expect this rally to continue. When you see stocks going down the way they did yesterday, you question, is this a buyable dip? Will the markets go higher, or are we going to see a leg lower?
And as I love some of the headlines I saw coming in this morning, the one that stuck to me, and I even mentioned in my intro because why not? $500 billion lost on the Philadelphia Semiconductor Index in, 2 days, as if the world is ending. Lost in a headline like that, Inez, is, look, the companies continue to do very well. AMD didn't miss estimates. They did not show profit growth. This is not world-ending pullback here and we're headed into a bear market. I mean, that's just not the case.
No, and Wall Street has also talked about the strong quarter. You even have Citi that's saying, you may see some pressure on the stock because of slowing Q over Q growth in AI business. But they're expecting the company to raise its long-term guidance at its analyst day. You also had Lisa Su that was talking about the partnership with OpenAI and how this will accelerate their AI business, and they could see $100 billion in revenue over the next few years. So Wall Street has a lot that they like with a company like AMD, and AI is still the driver of these markets, and what Wall Street is expecting the markets to go higher with their year-end targets and going into next year, and it is in part and mostly because of AI.
Brooke, I want to go back to my doom and gloom because why not? I was looking at McDonald's results this morning. That U.S. result, it was driven by a higher transaction value, which tells me, didn't they launch that new revamped value menu in the quarter? Like, where was the traffic from that? Is it that stretched out there in consumer land that people can't, buy a Big Mac?
Brian, what we heard on the call, which is currently still underway, is essentially that low-income consumers, they pulled back nearly double digits, and high-income consumers visited more, nearly double digits. And so really what we're seeing here is this ongoing bifurcation among consumers. High-income consumers really still seeking out value, despite the fact that they have these high gains from the S&P 500, that they're seeing, higher wage growth, all these different factors that are playing into them, and yet they're still seeking out value. And over this past quarter, McDonald's returned the snack wrap. They brought those extra value meals. They also, now heading into the back half of the year, they introduced that Monopoly game, and they're really doing everything they can just to get the consumer in the door. But this certainly is an environment where we're seeing a QSR chain like McDonald's winning and benefiting from introducing more value options to their menu.
Fair point. Ben, let me go back to you because I mentioned Bank of America at the top. I had a good chat with Bank of America CEO Brian Moynihan. He did tell me that not seeing an impact to their business in terms of sales. I guess he sees that through debit and credit spending as a result of the government shutdown. But what he did note that was really of interest to me, and this is in your wheelhouse, their medium-term outlook for 12% earnings growth is hinged on an outlook for interest rates at about 3%. So Bank of America, Brian Moynihan looking for raw rate cuts. Is that likely, Ben? I know we had the Fed chair kind of push back on that, but is that still the base case?
To an extent, it makes the base case, but I do think that the market has been right to pull back some of the odds for rate cuts to start off in the first half of next year, and that has to do with one that a lot of the Fed members got on the track again of inflation. Earlier this week, Cook, for example, which is kind of notable, she made a pretty strong statement about that they would forcefully act if tariffs were to be coming through more forcefully, more on inflation than they had expected. And I think that's something to keep in mind because It is about the employment picture, these rate cuts, but it's also that they cannot cut rates so quickly because they're dealing with an inflation that's staying sticky above their target and their tariffs. And so I think ultimately the Fed will reach this 3% roughly, and that's where the market has priced it. So I think the Fed also themselves want to get there because that's, I think, the level where they feel the policy is no longer restrictive in any sort of way. But until they get there, I think they're going to go slow. So they may even skip December, I think, before they make a next move.
And as it is interesting to see Bank of America even have this investor day. I don't think this is something they normally, it's not something they normally do. I think they're being pushed by investors to have something like this because of how the stock is done relative to more of the investment banks, which have had a big push this year. But again, this is still a very well-run bank that theoretically should do quite well over the next few years.
Yeah, 100%. I mean, financials have done well this year, and this is also a great glimpse also. I mean, your conversation that you had was also a great glimpse as to how they see the sort of economy unfolding, how they see these markets, and how they see the Fed reacting and going into next year, which Wall Street is expecting a continued easing of Fed rate policy going into next year.
Ben, I'm going to get a little more into this next week at our Invest event here. But what do you think the damage has been to the Federal Reserve as a result of all the attacks from the administration? The longer term damage.
What's notable, Brian, is that there are surveys out there, big business surveys, that are indicating that the Fed's inflation target is no longer 2%, but they think it's 2.5%. And I think that has a lot to do with this credibility issue that you mentioned here, because typically a central bank saying is 2%, that's credible, right? And that seems to be changing. And also in the consumer surveys, if you look at the Conference Board or any of these other ones, the inflation expectations have moderated, but the one-year inflation expectation is still really elevated. And that indicates, I think, that people don't expect inflation to come off so quickly, and that the Fed is not doing maybe enough of it to bring it down. So I do think these attacks have had an effect on the credibility of the Fed.
All right, Ben, Brooke, and Inez are going to hang out with me for a little while longer. You're not done with me yet. We're nearing a big day here at Yahoo Finance, our annual Invest event. It's going to be as huge as Palantir's quarter guidance on Tuesday on November 13th, starting at 8 a.m. Eastern. We've got a special full day of live global coverage of the key themes driving the market, AI, crypto, and much more, with the top people in corporate America you'll want to hear from. Especially the case right now as top CEOs warn about a stock market pullback. We'll be talking about the future of pharma with Pfizer CEO Albert Bourla. Eric Trump will be stopping by to explain his all-in stance on crypto. And former top Fed official Lael Brainerd will share her latest thinking on the outlook for interest rates. Questions for our esteemed guests are now open and flowing in from the Yahoo Finance community right at the top of the homepage. Some of the questions I've already gotten are absolutely awesome. Keep them coming. Don't miss Yahoo Finance Invest live all day on November 13th. Save the date and tell all your friends. Welcome back to Opening Bid. I'm locked in on retailer Gap today. The company will report its third quarter earnings just a few days before Black Friday on November 20th. Interestingly, despite Gap continuing to print solid results as it continues along its turnaround path under CEO Richard Dickson, the stock is down 5% year to date. That likely reflects the margin overhang that are tariffs and signs of spending weakness among Gap's bread and butter middle-income shopper. Citi analyst Paul Ledgway said today, though, the street may be positively surprised by Gap's earnings report. He's banking on an earnings beat and strong sales at Gap and Old Navy. Fourth quarter earnings guidance may also come in ahead of estimates, says the analyst. All right, Papa John's shares are still under pressure as private equity powerhouse Apollo reportedly will not be taking the company private for a rumored $2.1 billion. The stage is now set for a tough set of earnings for Papa John's when it reports on Thursday. Despite having more than 6,000 locations worldwide, Papa John's is valued at a fraction of longtime rival Domino's Pizza. It says a lot about how Domino's, despite its own struggles in the digital food delivery era, has been able to keep profitably growing around the world. Let's get the roundtable to weigh in, pun intended there. Ben Emmons, Brooke DePalma, and Inez Ferre. Brooke, right over to you. You cover fast food for us. This Papa John's has been struggling for some time. You have to imagine this report of a deal not happening is probably an indication of the earnings report later this week not being a good one.
Brian, I've been speaking to so many sources over the past 24 hours or less than since Apollo pulled back this offering for a premium of $64 a share. Keep in mind the stock only rose to about $55 per share last month. And what Wall Street is expecting from this upcoming earnings report is only same-store sales growth of about 1.5% to 2%. Now you give a McDonald's, who just posted same-store sales growth here in the U.S. of more than 2%. And taking a step back, what we're seeing across this QSR space is really these declines in same-store sales growth, this pullback of particularly low-income consumers, and that's really making it less attractive for these PE firms willing to take a risk. Now, based on the multiple conversations that I've had with so many sources over the past few hours, is that PE firms, they typically like these fast casual chains. They have good cash flow. They're very attractive. But in this environment where QSR is down, low-income consumers are pulling back, maybe they're not as attractive and what they used to be. And for example, on Tuesday morning, we saw a PE firm and a franchise operator acquire Denny's. Now, Denny's is more of that casual dining space. So perhaps we're in this environment where QSR is doing bad, PE firms are maybe saying it's not worth it, and they're going for more of those casual dining players that seem to be attracting consumers right now with more value.
And as hat tip to private equity, and of course I should mention Apollo is the parent company of Yahoo Finance. Hat tip to private equity for not perhaps pulling the trigger on Papa John's. Look at all the ordering options we now have. I can get a tomahawk steak delivered right to my house, right to my barbecue, Inez, from Whole Foods. Back in the day, they may have been in 1885, maybe this was a pizza. So, it's hard to see when that inflection point in a Papa John's, Domino's, Pizza Hut was put in the sales block this week. It's hard to see when that inflection point will come.
Yes, because they're all competing with, as you said, Whole Foods, Costco, all these stores that supermarkets that will sell you pizza that you can have also delivered as well to your doorstep if you're ordering groceries to be delivered. Look, there's clearly something going on in this fast food chain space. There is, as Brooke was mentioning, the low-income consumer that is struggling. And this is not something that is going away anytime soon, because you still have cost pressures, you still have margin pressures, you still have input prices and labor costs. So all of this is sort of spiraling into this sort of perfect storm when it comes to this fast food chain space. And you're seeing the turmoil right before your very own eyes. Inez, you played a part in this deal not happening. You told us yesterday that you buy pizzas at Costco, and I'm sure you're not alone. You're playing a part here. 100%. If I can buy a very good pizza at Costco that looks just like the kind that you can get from a Papa John's, why would I go to get one at Papa John's? You can get a lot of these now pizzas that are frozen, and you take them out of the oven. Your kid doesn't know if it came delivered by the doorbell or not. Ben, you don't eat this crap, right? You're a green drink smoothie guy, and just try to stay healthy.
I do try to stay very healthy, Brian. It's every day running and 150 push-ups and cold showers and that kind of thing. I do listen to the debate. What's really going on here is the K-shape, right? The K-shape economy. You talk about the sizzling steak at Whole Foods versus deep dish at Papa John's. The trade is easy, right? You go for the sizzling steak on top of these nice pizzas that they sell at Whole Foods. I think this is the issue here. The low-income folks are struggling. Maybe also because of the employment picture there, particularly changing. That's the latest data out of it. That yes, low income is perhaps more at risk for this AI effect on employment than maybe higher income. At least certain cohorts. I think it all plays a role here. So it's not I think this may be a one-off though, Brian. This deal with Apollo versus Papa John's, because although private equity hasn't had a great performance over the last year, maybe reflective of the underlying economy softening. There's still a lot of deals out there, so I don't think I would write off the PE sector overall by this just particular deal.
Ben, you've been coming on these our shows for years. I didn't know about your cold shower likes. It's good. We'll take that offline though. We got to keep moving here to our question today. Yeah. Tesla will be hosting its annual shareholder meeting on Thursday with all focus on Elon Musk's $1 trillion pay package. Some vocal names in investing have come out against the pay package, including Norway's sovereign wealth fund Even Pope Leo has voiced his concern. My question of the day is this. Let's say there is a surprise on Thursday and Musk's pay package doesn't get approved. Musk then makes good on his threat and resigns as Tesla CEO. Probably will do this on X. Would Tesla stock get cut in half, or would there be less dramatic type of move, say only a 25% plunge? Ben, over to you. Hot potato. Go. I think Ben froze. Inez, I will put this question to you.
Yeah, look, if for some reason it does not get approved, then yes, you would see Tesla stock going down. But I will say, I'm going to go with Polymarket, which shows a 96% chance that it's going to get approved.
Ben, let me get back to you. I think you're unfrozen like that warm Costco pizza that Inez has. Do you think the Tesla stock will be cut in half if Elon Musk resigns? I'm trying to get a sense of the Musk premium built into Tesla.
Yeah, it's a cold shower, Brian. It's if he resigns, the stock gets a big cold shower. There would be a big sell-off in the stock.
Brooke, this wouldn't be good. Elon Musk, a controversial figure, world's richest person, but he's the visionary that has put Tesla together. You lose him, you lose a large part of the thesis that is his company.
Brian, if we learned anything this past year as Tesla finally saw year-to-date gains, I think just nearly back in September, is that this is a company that really does need Elon Musk at the helm with that visionary plan, that commitment that he has to the company, even sleeping on factory floors, as some say. But really what we saw was that Elon Musk pulled out and sort of focused more on the government efficiency plans and all that. Investors did not like that. They like a company where Elon Musk is really leading the charge, leading the momentum, and ultimately innovating at the cadence that he does, especially with maybe that, more opportune price point in this environment where consumers are looking and seeking out value. Well, yet again, I think that this is a company and investors that really do like him at the helm. I think that investors will do what they can to ultimately approve this pay package, but we are hearing some say, like Norway Wealth Fund, they're their 9th largest shareholder, they're saying that they ultimately oppose Musk's pay package. But this is, yet again, an investor group that really does like Elon Musk at the helm. And so with so much back and forth, it'll be interesting to see the way it plays out.
Elon should just go out and buy Papa John's, Brooke. He could stick those pizzas in the back of these robo-taxis and call it a day. It sounds like a profitable venture to me.
Pizza out of the CD, drive.
There we go. You're right on, Brooke. You're right on. All right, a big thank you to my opening roundtable of Ben Emmons, Brooke DePalma, and Inez Ferre. Appreciate it. Coming up, Ali Cannell has you covered on Market Catalyst. Don't go anywhere.